Hello? Hello? Am I audible?
Yes, sir.
So let's start our session on international finance. We have completed so far 2 units, and today we will be starting the third unit of international finance, third unit. Can you see my screen?
Yes, sir.
Okay. Let me share you the screen of unit number 3. As per our syllabus from Pune University, let me read out the points which are related to unit number 3. It is about foreign exchange market. The topic title is the transaction on the international foreign exchange market. Just have a look on this first slide, where we will be talking about spot transaction, forward, derivatives. Now this foreign exchange market is being divided into in these 3 areas: spot, forward, and derivatives. Let's know more about this. Hello. Exchange rate quotation. Rate quotations are given in 2 ways: direct quote and indirect quote. Direct quote, it is the quote where variable unit is home currency, means home currency gets changed and foreign currency remains constant. Foreign currency remains constant. That is known as direct quote. Whereas in indirect quote, vice versa. Variable unit is foreign currency and constant is home currency. Constant is home currency. So note down this PPT, and if you have any doubt, please ask me, because from the examination point of view, you may be asked, what do you mean by direct quote? What is indirect quote? Or you will be asked to identify which is that quote, whether direct or indirect. So identification is, let me show you the example how direct quote it is being shown. Now look at here, look at my cursor. Can you see this direct? Are you able to see this direct? Now this example here, rupees 75.34 per dollar. So this is known as direct quote. Can you hear me? Hello?
Yes, sir.
So this is the example of direct quote. And on the second line, indirect example. This is the example where on the first foreign currency appears and followed by home currency. Rupee is our home currency. So home currency comes later. First foreign currency. And here foreign currency is variable and rupee is a constant. See here, rupee means 1 rupee. And here dollar means how many dollar? In case of direct, how many dollar here? Yes. How many dollar? In the direct quote, here oblique dollar. Dollar means here how many dollar? Hello. Please answer me. Hello, how many dollars are here? There is only $1. I told you, this in direct quote, rupee is variable and dollar is that is foreign currency is constant, either dollar or maybe pound or whatever it is. Foreign currency is constant and rupee is variable. Vice versa in indirect, foreign currency is variable and home currency is constant. Getting my example? Can you suppose if you are in examination, if you are asked to recognize which is direct quote and which is indirect quote, can you recognize? Hello? Hello? Am I audible? Can you hear me? Hello? 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 Can you hear me?
Yes, sir.
So in examination, if you are asked to recognize which is direct quote and which is indirect quote, so I am asking you, can you recognize now direct quote and indirect quote? Can you recognize or not? Yes or no? ओळखता येईल की नाही तुम्हाला डायरेक्ट कोट कुठला आणि इनडायरेक्ट कोट कसं ओळखायचं ओळखता येईल की नाही डायरेक्ट कोट आणि इनडायरेक्ट कोट ओळखता येईल का हॅलो 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 कसं ओळखणार डायरेक्ट कोट anyone can share me how will you recognize which is direct quote hello hello how will you recognize direct quote what is the way to identify whether it is direct quote or indirect quote what is the way hello I am not getting any response from your side hello hello एक्झामिनेशन मध्ये जर विचारलं डायरेक्ट आणि इनडायरेक्ट कोड ओळखा कसं ओळखणार तुम्ही डायरेक्ट कोड कसा ओळखायचा हो की नाही मला सांगा लवकर ओळखता येईल की नाही ओळखता येणार कसं ओळखणार तेच विचारतो ना कसं ओळखणार डायरेक्ट कोड कसा ओळखायचा ओळखता येईल ना मग सांगा ना मला डायरेक्ट कोड कसं ओळखणार हॅलो डायरेक्ट कोड कसा ओळखणार डायरेक्ट कोड मध्ये आधी होम करन्सी येते आणि नंतर फॉरेन करन्सी बघा इकडे आधी काय आहे इथे आधी काय आहे रुपीज आहे आणि नंतर काय आहे डॉलर मग आधी रुपीज आणि नंतर डॉलर येतं त्याला म्हणतो आपण डायरेक्ट कोड कळलं त्याला काय म्हणतो आपण डायरेक्ट कोड आता इकडे बघा इथं आधी काय आहे नंतर काय आहे हे कर्सरकडे बघा आधी काय आहे नंतर काय आहे
डॉलर आहे
हा त्याच्या अगदी उलट पहिल्याच्या उलट तर त्याला आपण म्हणतो इनडायरेक्ट कोड त्याला म्हणतो आपण इनडायरेक्ट कोड हा म्हणूनच मी स्लाइड तुम्हाला शेअर केली की डायरेक्ट कोड मध्ये बघा व्हेरिएबल युनिट होम करन्सी पहिलं येतं आणि नंतर मग फॉरेन करन्सी ही कॉन्स्टंट असते ती नंतर येतं. इनडायरेक्ट कोड मध्ये उलट, आधी फॉरेन करन्सी नंतर मग होम करन्सी इनडायरेक्ट कोड मध्ये. तर अशा पद्धतीने हे एक्सचेंज रेट ओळखायचा आहे. ओके. आता एक्झाम्पल ऑफ क्रॉस रेट. आता क्रॉस रेट करतोय आपण, म्हणजे कसं आहे, इफ $1 इज इक्वल टू 1.2829 ऑस्ट्रेलियन डॉलर and if $1 is equal to 1.0892 कॅनेडियन डॉलर. म्हणजे बघा आता इथं आपण पहिलं डॉलर आणि ऑस्ट्रेलियन डॉलरचं कंपॅरिझन केलं आणि नंतर मग ऑस्ट्रेलियन डॉलरचं कंपॅरिझन कॅनेडियन बरोबर केलं. याला म्हणतो आपण क्रॉस रेट. याला काय म्हणतात, क्रॉस रेट. एक्झामिनेशन मध्ये from the examination point of view, it is very, very important. Please try to understand. And if you are not getting, please share me. जर समजत नसेल तर पटकन बोला. समजलं का इथपर्यंत मी काय बोलतोय ते? इट मीन्स रिपीट युअर क्वेश्चन. समजलं ना? How many Canadian dollar will be equal to $1 will be calculated as under. आता बघा आपल्याला जर असं काढायचं असेल की एका डॉलर मध्ये किती कॅनेडियन डॉलर आहे, तर हा कसा काढणार आपण, $, डिवायडेड बाय ऑस्ट्रेलियन डॉलर किंवा कॅनेडियन डॉलर डिवायडेड बाय $. म्हणजे मग आपल्याला हे रेट मिळतील त्यांचे. त्याला डिव्हिजन करायचं. त्या जी काही करन्सीचं आपल्याला करायचं ती एका वेगळ्या देशाची करन्सी डिवायडेड बाय दुसऱ्या देशाची करन्सी, जे काही आन्सर मिळेल तो तुमचा रेट असणार आहे. दिस वे वी कॅल्क्युलेट रेट. एक्सचेंज रेट इज डिटरमाइंड ऑन द डिमांड अँड सप्लाय फॉर सच फॉरेन एक्सचेंज. डिमांड अँड सप्लायच्या बेसिसवरती फॉरेन एक्सचेंजचा रेट हा काढला जातो. नाव डिमांड फॉर फॉरेन एक्सचेंज, that is import of goods and services, that how much goods and services being imported. When we do import, what happens, currency, foreign currency comes or goes at the time of importing. When we import goods,
currency comes.
Currency, foreign currency comes. Import म्हणजे काय बरं? What do you mean by import? When we purchase goods from other country, त्याला म्हणतो आपण import. आता समजा now you are staying in India and you want to buy foreign made TV. तर त्याला म्हणतो आपण इम्पोर्ट, कारण तुम्ही फॉरेनवरनं टीव्ही इकडे भारतात आणलेला आहे. सो इट इज इम्पोर्ट ऑफ गुड्स. म्हणजे जेव्हा तुम्ही फॉरेनचा टीव्ही भारतात आणला तर त्यावेळेला करन्सी येते का जाते? आता सांगा मला, करन्सी येते का जाते? मग
तर इट गोज.
इट गोज. इम्पोर्ट मध्ये करन्सी गोज. अँड एक्सपोर्ट मध्ये काय होईल मग? एक्सपोर्ट मध्ये
इट कम्स.
इट कम्स. नाउ इट इज करेक्ट. In export, our currency increases, and in import, our currency decreases. Second, demand for foreign exchange. म्हणजे आपण हे बघतो की फॉरेन एक्सचेंजला एवढं डिमांड काय आहे, तर हे इम्पोर्ट मुळे फॉरेन एक्सचेंज आपल्याला घ्यायला, कारण आपल्याला इम्पोर्ट करायचं आहे. म्हणजे मग आपल्याला त्यांची करन्सी विकत घ्यावी लागेल, म्हणजे आपले पैसे जातील आणि त्यांच्या करन्सीला डिमांड वाढणार ना. डॉलर मध्ये जर आपल्याला पैसे द्यायचे असतील तर डॉलर परचेस करावे लागतील, म्हणजे डॉलरची डिमांड वाढली की नाही इथं, कारण आपल्याला इम्पोर्ट करायचं, आपल्याला विकत घ्यायचे गुड्स. विकत घ्यायचे म्हणजे मग फॉरेन एक्सचेंज आपल्याला विकत घ्यावं लागेल. तर हे एक कारण आहे की वाय देर इज अ डिमांड फॉर फॉरेन एक्सचेंज. अनदर इज investment in foreign countries. Many times there is a investment in foreign countries. So because of that, there is a demand for foreign exchange. From the examination point of view, we will be asked descriptive question that discuss the demand for foreign exchange. So please remember these points, and whatever information I am giving, try to understand. But you are remember this point: import of goods and services it has impact on demand for foreign exchange. Then investment in foreign countries. Other payments involving international transaction, that is payments by Indian government to various foreign governments for settlement of their transaction. Then the next one is other types of outflow, like say foreign capital, like donation. Many times donations are given. So in that case also we need foreign exchange. Then supply demand झाला. आता now the other side, supply of foreign exchange. How foreign exchange is being supplied. आपल्याला फॉरेन एक्सचेंजचा सप्लाय कसा येतो. जेव्हा आपण आता डिमांड कधी होते, इम्पोर्टच्या वेळेला, बरोबर ना. हे बघा, डिमांड कधी असते, इम्पोर्टच्या वेळेला. तर एक्सपोर्ट जर केलं तर मग सप्लाय होईल ना आपल्याला, फॉरेन एक्सचेंज मिळणार आपल्याला. तर कंट्रीज एक्सपोर्ट्स ऑफ गुड्स अँड सर्व्हिसेस टू फॉरेन कंट्रीज. when we export our goods or services to foreign country, then supply of foreign exchange happens. Then inflow of foreign capital. आपल्या भारतामध्ये एखादी फॉरेन कंपनीला जर काही कंपनी तयार करायची असेल, then foreign exchange comes to India. So that is the inflow. Or payment made by foreign government to Indian government. So in that case also there is a supply of foreign exchange. Other types of inflow of foreign capital, like remittance by the NRIs, donation received, etc. A theory we have discussed. Now I will take you to the market, which is derivative market. And then we will understand forward market and future market. First, let me explain you derivatives market. Derivative market is where here is derivatives. Derivatives. It is a financial product whose value is derived from the value of another asset. म्हणजे बघा कसं असतं, there is one main asset, main, okay. Example, an equity. Equity ही main asset आहे. Example is equity किंवा bond or commodity. याला म्हणतो आपण main asset. And major derivatives include forward contract, future contract, option. This is future contract. This is future contract. Let me rectify this. This is future contract. This is future contract, option contract, and future and swap contract. So these are the major. If you are asked what are the examples of future, what are the examples of derivatives, what are the examples of derivatives. So these are the examples of derivatives. Derivatives means future, option, and swap. Please remember this example. The major derivatives include future, option, and swap. Getting it? समजलं का?
Yes, sir.
And what is derivatives? Derivatives, it is a financial product whose value is derived from the value of another asset. एका दुसऱ्या asset मधून एक वेगळी asset तयार होते. मी एक तुम्हाला simple example देतो. For example, from milk we prepare paneer. So paneer is the example of derivatives. Main asset काय आहे याच्यामध्ये? What is main? In my example, what is main? हॅलो, व्हॉट इज मेन? मी तुम्हाला एक्झाम्पल दिलं ना. फ्रॉम मिल्क वी प्रिपेअर पनीर और वी प्रिपेअर बटर मिल्क. बटर मिल्क कशापासून तयार होतं? पनीर कशापासून तयार होतं? पनीर
Milk.
milk. So milk is a main asset here. Okay, and paneer is a derivative. Paneer is derivative. Look at this. It is a financial product whose value is derived from the value of another asset. From the another asset is called. Only example दिलेले. Main asset like say equity, bond, or commodity. And major derivatives are, remember, future, option, and swap. These are the major derivatives. Then next one is, it is an instrument that derive its value from another underlying asset or rate. It has no independent existence or value. It has no independent existence or value. Common derivatives are future, options, and swaps. Future, options, and swap. These are the common derivatives of a financial product. Again, in examination, you will be asked to identify which is derivatives. Which are the derivatives? तर तुम्हाला ओळखता आला पाहिजे. तर डेरिव्हेटिव्ह हे कुठे येते? फ्युचर, ऑप्शन अँड स्वॅप. त्याला आपण डेरिव्हेटिव्ह म्हणतो. डेरिव्हेटिव्ह. Any doubt from this particular PPT?
No, sir.
Any doubt? Okay. Let me go ahead. Then we are continuing the same. In forward market, आता आपण बघितलं फॉरवर्ड सुद्धा हे एक वन ऑफ द मार्केट इन फॉरेन एक्सचेंज. इन फॉरवर्ड मार्केट, exchange of currencies occurs on a future date through the rate is fixed today. म्हणजे काय? Now today is 21st of February, and on 21st of February we are making one transaction that will happen on say 10th of March. 10th of March. So what is the future date? Future date is what? What is future date? Hello. On 21st of February, I am making transaction with foreign country. That transaction will be completed on 10th of March. So 10th of March is the future date. Okay. Yes. Hello. You are asking something? And today, whatever rate is there, now suppose if today 21st of February, what is the rate of today of dollar? Anyone has idea? What is the dollar rate of today?
Around 71, 73.
Around 71 to 73. So today you are fixing your rate, that is 73, suppose around 71, 73, suppose 72 rupees if it is fixed. So on 10th March, whatever rate is there, that rate will not change. Today is 72 and today you are making transaction which will complete it on 10th of March. तर 10 मार्चला रेट काही का असेना, 70 रुपीज असू द्या, नाही तर 65 रुपीज असू द्या, नाही किंवा 80 रुपीज असू द्या. ट्रान्झॅक्शन किती रुपयाने पूर्ण होणार? किती रुपयाने पूर्ण होणार? आजचा रेट काय आहे? 71 to 73. तर आजच्या रेटनेच फक्त ट्रान्झॅक्शन कंप्लीट होणार. 10 मार्चचा रेट काही का असेना. सो दिस इज द feature of forward market. Whatever rate of today, it is being fixed, and the future date transaction gets completed. Now, याच्यामध्ये participants कोण आहेत? Central bank, commercial bank, business firms, and India. Now, who is the central bank in India? Who is the central bank in India?
Sir, RBI.
RBI. RBI is the central bank. So RBI is the major participant, and commercial bank. Commercial bank like say maybe our HDFC Bank or Kotak Mahindra. These are the example of commercial banks. Business firms and companies are also participants, and individuals like you and me. Even we can also have transaction in this forward market. Many people, those who are having surplus funds, they invest in forward market. Now, operators who does this transaction, who are the operator, म्हणजे ज्याला आपण म्हणतो की याचं सिस्टम कोण राबवतं. So the operators are broker, speculators, hedgers, and arbitrators. These are the operators. Now brokers they charge commission, speculators take position, hedgers, business enterprises who like to cover their exposures, and arbitrators make riskless profit exploiting differences in market. Another feature of forward market, it is rates are quoted with a buy-sell spread. Now, what is spread? Spread, it is the difference between selling rate and buying rate. Difference between selling rate and buying rate. That is known as spread. म्हणजेच थोडक्यात आपण त्याला म्हणू शकतो कमिशन किंवा प्रॉफिट. But they don't call commission or profit. It is technical. The word is spread. Do not call. I am just for your understanding purpose, I am sharing the word commission or profit. But it is in technical word, in derivative market, it is known as spread. Selling rate minus buying rate. Okay. Now forward rate is either at premium or discount with respect to spot rate. Formula: forward rate minus spot rate. Forward rate minus spot rate divided by spot rate. Divided by spot rate. Forward rates can be used in quoting prices of exports and in hedging receivables or payables. Then here, currencies of only the major developed countries are normally traded in the forward market. This is also you need to remember. कुठल्या currency forward market मध्ये currencies of only the major developed countries are normally traded in the forward market. म्हणजे example, US dollar, euro, Japanese yen, UK pound, Canadian dollar, Australian dollar, and Swiss franc. These are the currencies which are used in forward market. Other currencies, there is no scope for other currency. फक्त एवढ्याच currency याच्यामध्ये डेव्हलप कंट्रीच्याच currency फॉरवर्ड मार्केट मध्ये जातात. Understand? Are you following? Hello? Are you following?
Yes, sir.
Now,
Yes, sir.
another characteristics of forward market, kind of contract, major currencies in the deal, cash flow at the time of maturity, quotations like bid, ask, spread. Just now we have seen the difference between selling rate and buying rate, that is spread. Lock for the entire period of contract. Risk of default on either side, dealer's commission inbuilt with the ask rate. Forward market is regulated. Now, an overview of derivative securities. A derivative is an instrument whose value depends on the value of underlying variable. Now, how it is? Interest rate or foreign exchange rate. ज्याला आपण आपल्या इंडियन जेव्हा आपण लोन घेतो ते इंटरेस्ट रेट असतो बघा. Similarly, there is a foreign exchange rate. Index value such as stock index value, commodity price, common stock जर का तो न्यू असेल तर single stock future other. Thus the value of derivative is derived from another variable. Therefore the value of derivative is derived from another variable. classification of forex risk. Now, please everyone try to understand this classification of forex risk. What are the risks which are involved in foreign exchange market? So there are 1, 2, 3, 4. There are 4 points. Transaction exposure. Now, what is this transaction exposure? Includes obligation for purchase or sale of goods and services at previously agreed prices, borrowing and lending of currencies, uncertain value, open position in cross currency commitment, short term. So in transaction exposure, it includes obligation for purchase or sale of goods, either purchase or sale of goods or services at previously agreed price. आधी जी price ठरलेली असेल, whatever price is decided in earlier stage, that price is considered as previously and borrowing and lending of currencies, uncertain value, open position in cross currency commitments. That is known as transaction exposure. So this is transaction exposure. What is this transaction exposure? Which includes obligation for purchase or sale of goods. Translation exposure. After understanding transaction exposure, what is translation exposure? Translation exposure, it is restating foreign financial statements of the parent company, also called accounting exposure. Present measurement of past events. Such exercise results in national gain or loss, short term. So transaction exposure is also short term, and translation exposure is also short term. So both are having same short term. Short term. The above two risks are minimized by foreign exchange currency swap, leads strategy, and lag strategy. In order to minimize the risk of this either transaction exposure or translation exposure, because there is a risk involved. So this risk is being minimized. And what are the tools for minimizing this risk? Forward exchange and currency swap and lead strategy. These are the tools. By using this tool, we minimize the risk of foreign transaction and translation exposure. Now third one is transaction exposure, translation exposure. Third one is economic exposure. Economic exposure, it is the exposure which considers company's international earning power. How much company has international earning power? Long run effect. NPV, that is a net present value. Reduced by disappraisal of location, flexing sourcing, long-term effect. So these are the points which cover under economic exposure. Economic exposure, which considers firm's international earning power, NPV. On the basis of this NPV and firm's international earning power, we assess the economic exposure of company. So classification of foreign risk, there's transaction, translation, and economic exposure. There are 3 exposure: transaction, translation, and economic. 3 exposures are there. May I go to next slide?
Yes,
Any
sir.
doubt? Now ECB. ECB stand for external commercial borrowing. In short, it is ECB. External commercial borrowing means, as the name suggests, ECB, when company borrows money from external sources, that is ECG. ECB. Company borrows money from external sources. If company manages their money through internal sources, then ECB will not come into the picture. ECB comes into picture when company borrows money from external sources. So money is borrowed from non-resident leaders. So that is the example of ECB via bank loans, fixed rate bonds, non-convertible shares, optionally convertible or partially convertible preference shares, etc. And Average period is 3 years. Average period is 3 years. Maybe it may be more than that also, but minimum average is 3 years. Minimum average is 3 years. Now let us talk about the 4 basic derivatives: forward contract, future contract, swap, and option. These are the 4 basic derivatives: forward, future. Just now we have seen what is forward and what is future, and derivatives also we have discussed. However, many say there are only 2 basic derivatives. In some books you will find there are only 2 derivatives, forward and option, but actually there are 4 derivatives. But many times people they say that there are only 2 basic. These are the basic derivatives, forward and option. In addition to this forward and option, there are swap and future. They are also called as a basic derivatives. फक्त फॉरवर्ड आणि ऑप्शनच हे 2 नाही आहेत बेसिक डेरिव्हेटिव्स. Along with forward and option, there is also swap and future contract. That is also the example of basic derivatives. Okay.
Yes, sir.
Now, derivatives market, exchange traded future and options, standardized product. Where there are the standard products. So for that is standard product. Now, can you give the example of standardized product? Any example of standardized product? Any example of standardized product? What is standardized product? Where the specification and standards are fixed. That is known as, for example, say mobile. So there are various model numbers of mobile. Like say, suppose if you are using Samsung, so Samsung A30, A31. So in A30, the screen size and then features in every A30, you will find the same size of screen and same features. If you are referring A31, then there could be a different screen size and there could be a different features also. So it is not a standard. When we pick up A30, so in every A30, same screen is there. Or there are different schemes in A30. What's it? What do you think? Are there different screen size in A30? Are there different? Are you getting my example? Standard product code kashala म्हणतो आपण, where there is a specification is same. That is standard product. Specifications are same. Then trading floor or computerized trading, virtually no credit risk. Over the counter, that is called as the OTC, forward option and swap, over the counter. Often non-standard, customized products, telephone, dealer market, and some credit risk. Derivatives market. Then uses of derivatives. What are the uses of derivatives? Please note down this slide, the uses of derivatives. Number 1, to hedge or insure risk, that is shift risk. To hedge or insure. Shifting risk means what? One person is accepting risk and the same person is transferring risk to another party. That is known as shifting risk. Now, for example, if you are using a vehicle on a rental basis, so on a rental basis, there are some companies who provides car on a rental basis. So owner is different. Owner is giving his car to that agent, and that agent is giving to the customer. So here, three person and insurance company, four persons are involved: customer, then agent, owner, and insurance company. So the risk is being shifted from one person to another person. Second one, to reflect a view on the future direction of the market, that is to speculate. त्यामध्ये आपण speculate. To reflect a view on the future direction of the market. To log an arbitrage profit. To change the nature of an asset or liability. So this is also the use of derivatives. To change the nature of an asset or liability. To change the nature of an investment without incurring the cost of selling one portfolio and buying another. The next one is after understanding this derivative, let us understand the forward contract, because as per the our syllabus, we need to understand this derivatives forward. Yes, it is forward contract. Now what it is? Forward contract. The forward contract gives the owner the right and obligation to buy specified asset on a specified date at a specified price. That is known as forward contract. Anybody will read this again, the first point. What is forward contract? Please read out. Read out this forward contract, first line. This first bullet point, read out. Anyone? Can you see my screen? Am I audible? Hello? Am I audible? Can you hear me? Okay. So I am asking you that just read out the first point of forward contract. Anyone of you, read out loudly. Read it. Read. Forward contract gives the owner the right and obligation to buy a specified asset on a specified date. So the owner gets right and obligation. He gets right and obligation to buy a specified asset on a specified date at a specified price. So these 5 important things are there. There are 5 important things. Let me show you which are these 5 important things. See, right, then obligation, then specified asset, specified date, and specified price. So there are 5 keywords. Please try to remember. Right, obligation, specified asset, specified date, and specified price. This is the combination which we get in a forward contract. The seller of the forward contract has the right and obligation to sell the asset on the date for the purchase, for the price. Sorry. So the seller contract has the right and obligation to sell the asset on the date for the price. Then at the end of the forward contract, at delivery, ownership of the good is transferred and payment is made from the purchase to the seller. The payment is made from the purchase to the seller. at the end the forward contract at delivery. So this is this word delivery. Ownership of the good is transferred and payment is made from the purchaser to seller. So purchaser makes payment to seller, and in forward contract, as I told, remember these 5 things: right, then obligation, specified asset, specified date, and specified price. These are the 5 things we need to remember. Now, forward contract 2. Generally, no many changes, hands on origination date of the forward contract. Delivery option. Delivery options may exist concerning the quality of asset, the quantity of the asset, and the delivery date, the delivery location. If your position has value, you face the risk that your counterparty will default. Now, this is the difference between future and forward. Future versus forward. Futures are similar to forward, except futures trade on future exchange. These are the future exchange, CME, then CBOT, etc. These are the name of exchange, future exchanges. Futures are standardized contract. Forward it is not standardized. Futures are standardized contract. This increases their liquidity. Is it visible, this slide? Is it visible? Can you view this slide? Okay. But sometimes firms prefer precise custom-made OTC, that is over the counter forward contracts. Now default risk for future is lower because the clearing house of the exchange guarantee payments and initial margin is required. Future contracts are marked to market, daily resettlement. Now a consequence of daily resettlement is that future contract are like portfolio of forward contract, each with delivery day 1 day later. 1 day later. Now, in regards to the swap. Now, what is swap? A swap contract obligates 2 parties to exchange, that is, or swap cash flows at specified future dates. Basically, swap contract obligates 2 parties to exchange or swap cash flows at specified future date. A swap is like a portfolio of forward. Each forward in a swap has different delivery date and the same forward price. Now it's suppose $60 plus trillion market as of December 2001 in terms of notional principal. Another feature of swap, credit risk only involves the present value of the remaining expected cash flows from the swap. Credit risk does not involve the notional principal. Credit risk does not involve the notional principal. Only the party that expects to be paid the remaining net cash flows faces current default risk. Only the party that expects to be paid the remaining net cash flows faces current default risk. Call option, it is not in our syllabus, so we will not discuss call option. Now, so far today we have discussed swap, forward, and future. So the meaning of future, forward, and swap, that part we have covered. Then we have also discussed demand for foreign exchange and supply for foreign exchange. What are the factors which influences for demand for foreign exchange, and what are the factors which influences for supply of foreign exchange? That points we have discussed. So again, I repeat, from the examination point of view, you may be asked that what are the factors which influences demand over foreign exchange, or what are the factors which influences for supply of foreign exchange. So have you understood? Before we close today's session, can you hear me? Hello, am I audible? Am I audible? So before we close today's session, if you have any doubt, please ask. If any doubt, either you can ask me, or you can type in your chat box if any doubt. In regards to the factors which influences demand for foreign exchange, factors which has influence to demand, supply of foreign exchange, and then forward, future, and swap. Any doubt? If any doubt, please type in the chat box, or you can unmute yourself and speak with me. Yes. My experience in foreign exchange market, that is that was in I do not have experience in this forward, but in future, what we used to do is suppose in exporting or importing, we used to have the cases. Today, suppose it's 21st of February, and many traders or people, they were having transactions maybe on a future date, maybe next month or maybe after 2-3 months. So that kind of, so today whatever rate is there, that rate we used to fix for the future transaction, and then that time whatever rate was given, so it was our responsibility, even if in future date, if rate increases, then this will not be a loss to the customer. This, but then you will be thinking that is it loss to us? But we used to transfer our risk to some other party. This was the transaction we have done in foreign exchange market. So this was my experience. So we used to transfer our risk to some other party, and we have to pay commission to that other party. And they have their own study. On the basis of study, they were accepting this risk.
Okay, sir. Thank you.
Okay. Thank you all. We will close the session. Thank you.